Samson, coming live from us from a volcano, because they're called volcano bonds to a certain extent, because it's going to be financing this Bitcoin city that's surrounding this area of a volcano. And I'm wondering why any institutional bond investor would buy this.
Well, why wouldn't they?
Because it's got a 6.5% yield, and your yield on your current bonds of El Salvador that come due in 10 years is 13%.
Yes, but this bond has a Bitcoin component, and that is why it is called a Bitcoin bond. So when El Salvador is raising $1 billion in this first bond issuance, 500 million will be used to acquire Bitcoin, and then 500 million will go towards energy and mining infrastructure. So there is this war chest of Bitcoin backing this bond. And that dividend, or that coupon, actually increases after the 5th year. So for the first 5 years, it will be a 6.5% coupon. But then it accelerates to what I call a Bitcoin dividend, or a special dividend that is basically the Bitcoin being sold off, the $500 million worth of Bitcoin being sold off gradually, quarter by quarter.
Yeah.
So the El Salvador government will share that with the bondholders.
Why wouldn't, if a institutional bond investor was allowed to buy into this, so had the ability within the rules of the fund they invest to have exposure to crypto, why wouldn't they just buy Bitcoin straight up rather than have a 50% take?
Well, they could buy Bitcoin straight up, but usually the mandates or charters don't allow them to hold cryptocurrencies like Bitcoin.
But they'd be allowed to hold these bonds, you think, in their mandates?
Why not? It's just a bond.
But it's not just a bond, because it's related to Bitcoin, and as you say, 50% of it over a 5-year time frame, if indeed you manage to pay that back, would be able to be given based upon Bitcoin now. So do you think those mandates would allow them to buy in?
Well, that's really for them to figure out, but we're trying to structure this in a way that they can present it to their boards, their directors as a normal bond, because it is a normal bond that just happens to have a large chunk of Bitcoin behind it. But even if they don't buy it, I don't really see a problem. There is Bitcoin's market cap is over $1 trillion. There's about $145 billion worth of stablecoins, and this is just from the Bitcoin industry, traders, whales, and this money will just pour in. I was in Turkey talking to my friend, the CEO of BTC Turk, Oscar, and I told him about this plan. I told him I'm going to El Salvador next, and I told him about the bonds. And in 2 seconds, he said, "I'm in for $1 million." And then I said, "Are you sure you don't want to think about it? Do you want to see the specs? Do you want to read more?" And he's like, "No, this is for the people of El Salvador." So the money will come in. There's another whale that I talked to just before coming on your show, and he said, "I'll take 20 million of it." So,
but Samson, is it not wrong to think that people shouldn't do their due diligence first?
Yeah, they should do their due diligence, but there is an important part here, which is helping El Salvador and fixing the money supply. And I think that's more important than the exact specifications on a bond.
So you think, even without institutional bond investors, if they are perhaps driven away by the fact that the yield is so low relative to existing bonds, or indeed they can't have exposure to Bitcoin, do you think who will be the actual investor? It will be more crypto-focused enthusiasts, and they'll be good for 1 billion?
I think there's more money than $1 billion that's going to flood into this bond. The institutional investors, they can come in, they can do their due diligence. 6.5% is in line with most bonds around the world. And there is that special Bitcoin dividend. So they can run the calculations. If at the end of 10 years, Bitcoin is $1 million, we've done a calculation where Bitcoin's appreciating 35% year over year, then the yield that year will be about 90% plus the 6.5% coupon. But if it goes higher, we had another conservative model which put it at 140% APY plus the 6.5% coupon. Then it's a pretty attractive bond by any measure.
Definitely versus bonds, versus crypto, which, I mean, Bitcoin is up on an annualized basis 240%. So you might be therefore losing out to the opportunity cost of just getting into Bitcoin-related exposure rather than going into this bond. But Samson, I'm interested that you're in Turkey, you're in El Salvador. Are there other countries, other areas, municipalities looking at this with, dare I say it, perhaps political risks that some just don't always willingly swallow?
Well, there's risk in everything. Even buying Bitcoin comes with risk. And it's really just up to people to make their own decisions and take their own analysis on it, DYOR. I think there's a lot of interest. We've already had some institutional investors reach out to Blockstream, and they're very, very interested in this offering. And I guess that means that their mandate would allow them to buy this bond.
You talk about accelerate hyper-Bitcoinization and bring a new financial system built on top of Bitcoin. Can you just dissect what that means?
Well, hyper-Bitcoinization just means you don't need to go back to fiat currencies. You can just buy Bitcoin and stay in Bitcoin and spend Bitcoin. And El Salvador is a key part of that, right? Bitcoin is legal tender here, so you can buy Pavusa with a Lightning network, and you can just spend Bitcoin freely. And Bitcoin City is going to be a very attractive place, I believe, for a lot of Bitcoiners.
Meanwhile, though, of course, relations with the US and El Salvador, from a government perspective, seem to be unraveling. They're hitting yet a further low at the moment. There are, of course, worries of relationships between El Salvador and the IMF. Does any of that matter to some of the investors that you're talking to?
No. I don't think a lot of these organizations like the IMF or World Bank are really relevant in a world based on Bitcoin. They're only relevant because they can print money, they can make the SDR, they can make money out of thin air. You can't do that on a Bitcoin standard. It really takes us back to what money should be, which is just money, not a surveillance mechanism and not a tool to enforce your beliefs and economic policies on another nation.